Ladies and gentlemen, good day and welcome to PCBL Limited Q4 and full year FY22 results conference call, hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sanjesh Jain from ICICI Securities. Thank you, and over to you, sir.
Thanks, Faisal. Good afternoon, everyone. Thank you for joining on PCBL Limited Q4 and full year FY22 results conference call. We are joined on this call with PCBL Limited management, represented by Mr. Kaushik Roy, Managing Director, Mr. Raj Gupta, Chief Financial Officer, Mr. B.L. Chandak, Executive Director, Mr. Pankaj Kedia, Vice President, Investor Relations. I would like to invite Mr. Kaushik Roy to initiate the proceeding with his opening remark, post which we will have a Q&A session. Over to you, sir.
Thank you so much. Good afternoon, everyone, and a very, very warm welcome to this conference. I'll have few phases as I talk about the organization and the performance. The first section I'll talk about the current last quarter's performance as well as last full year's performance I'll talk about. Then I'll talk about change of name of the company to PCBL, the genesis behind that, and where do we stand today on that. In the third section, I'll talk about current market scenario and the outlook going forward. I'll also update you on the current expansion projects, greenfield as well as brownfield. And finally, I'll touch on the ESG initiatives what we have taken as an organization. And you are welcome to have your queries, your thoughts, share your ideas thereafter. Coming to operating and financial performance of FY22, we reported a decent performance last year. The sales volume was 4,54,187 metric tons during the year. Out of that, domestic volume was 3,08,000 and international was 1,45,000. Out of the whole 4,54,000, the tire accounted for 2.95 lakh metric ton. Performance chemicals stood at 1.24 lakh metric ton and specialty black was almost 35,000 metric ton. Last year, the export sales went up substantially. There was an increase of close to 37%. And out of our total sales in last year, 32% was on account of export for international market. Specialty black has been a focus area for the organization, which I shared also in the past. And we have a lot of research going on in this area. And over a period of time, we started this journey about 5-6 years back, and over a period of time, we reached a level last year when it closed almost 35,000 metric ton. Coming to power generation, we generated 534 million units during the year. And we have also moved up in terms of CPP capacity, power generation capacity by 15 megawatt by adding 2 CPPs, one in Mundra and one in Palej, 8 megawatt and 7 megawatt respectively. In recent times, we have seen there is substantial increase in crude prices, but in spite of that, we could manage to improve our EBITDA margin by almost 1,000 rupees per metric ton. This happened due to better operational efficiencies, leverage, and better portfolio of products. Talking about Q4, the quarter, The sales volume was 1,12,452 metric ton, and out of this, the domestic share was 77,000 metric ton, and export was 35,437 metric ton. Specialty during the same quarter was 9,350 metric ton. During the year 22, we have seen the crude average went up from $46 per barrel to $80 per barrel. Year-on-year average I am referring to. And this led to additional working capital requirement of almost 300 crore. However, we could manage it efficiently by good management practices and good initiatives. And here I will also request our CFO, Mr. Raj Gupta, to share a few thoughts how we manage this additional working capital requirement without having any negative impact on the organization. Raj, can you just share your thoughts?
Yeah. So with raw material price increase and consequent increase in our realization, our working capital requirement has gone up. It required more investment in receivables and inventory. However, we could negotiate better credit period with our vendors, and a good portion of the overall increase was, in a way, financed by our creditors or our suppliers. So on net basis, there is only a roughly 260-70 crore of net working capital increase, which has happened despite crude prices going up by almost 80-85% during the period. And because during the year we generated a significant amount of cash, we generated 550 crores of cash. So with that, our leveraging has not increased, rather it has gone down further. So as against last year's 0.31, the gross leveraging has come down to 0.26. Over to you, sir.
Sure. Thanks a lot for the update. Let me now talk about the name change. Earlier we were Philips Carbon Black Limited, and the new name is PCBL Limited, as all of you know. Let me talk about the genesis and logic behind it. Philips Carbon Black Limited, it clearly talks about carbon black. But over a period of last few years, you must have seen that our focus is also beyond carbon black in terms of application. Because carbon black also has a connotation that it is primarily used in tire, and therefore, as an organization, it was always something like PCBL means it is a tire raw material supplier, which is not really the case today. Because if you look at our portfolio today, you will find just about 60-65% goes into tire, and rest of it goes into performance chemicals application and specialty chemicals application. And as an organization, we are focusing a lot in last few years on performance chemicals and specialty chemicals. And therefore, the feeling was it is time to have a name which gives this feeling to everybody that it is not just about carbon black, but it is more into a chemical space. And this was the primary logic to move away from Philips Carbon Black Limited to PCBL Limited. That is why we have gone ahead with PCBL Limited. And in terms of initiatives, in terms of action, it is aligned with that, because as I just mentioned that we are having two R&D centers, one in India and one in Belgium. Between the two R&D centers and the technologies put together, we have close to 50 scientists and engineers and technologists working. And they're working in various areas like new product development, post-treatment, fundamental research, raw material related initiatives. So these are the four areas which are getting covered in the R&D between India and Belgium. So therefore, this logic of moving away from Philips Carbon Black to PCBL is absolutely meaningful for the organization, and this is what I wanted to also share with you, the reason and the genesis behind it. Looking at the last year's scenario in terms of market and the environment, as all of you know, last year was a kind of certain positives were there, but certain challenges were also there. At one point of time, it was looking like that we are out of COVID and things are looking up very nicely, which was a fact. And suddenly we realized that there are cases in different countries where COVID started picking up again. A new variant is getting reported. We are yet to know what is the impact of that, to be honest. How fatal it can be, we do not know today. So on one side, the uncertainty on COVID continues. It has not really abated completely. But in a way, we kind of started to live with this. We started accepting it as part of our life and, acted accordingly as an organization. But suddenly out of nowhere, another problem started, which was more about Russia invaded Ukraine, as all of you know. And consequently, the oil price, the Brent crude oil, which is directly linked to our raw material, went up from a level of last year's earlier level of 40, 45, then 60, then 70, and from 70 straight away we went up to 100 plus. And as we speak, it is still hovering beyond 110. So naturally, this is an issue in terms of oil going up so sharply, and naturally it takes a little time to pass it on to customers, to all our clients to pass it on. So that's a bit of a challenge we found in last quarter, and that also led to another problem, which is very high inflation in number of countries, including countries like India and USA, which may have some impact on the demand side. So this is what we have seen in last quarter. But as we get into this new year, new financial year, we feel that there are also some silver linings. Yes, there are challenges on account of pandemic, on account of Russia, Ukraine, but also we can see clearly there is some silver lining. And let me talk about the silver lining here. Russia is a major supplier of carbon black. So is the case with China. Because of this issue, Russia is little bit getting restricted in terms of supply of carbon black to different countries, particularly Western countries. So that is one advantage to us. I will say that on the supply side, there is a challenge, there is constraint from Russian side. On the other side, as you all know, that China is the largest producer of carbon black, but in that country, over a period of time, there is consolidation which is happening. Also, there is a drive from government on pollution, on restriction of pollution, and consequently, many small players of carbon black, they have shut their shop. And thirdly, also the availability of raw material, which basically used to come from steel industry of China, that availability also shrunk because of technological shift in manufacturing process of steel from blast furnace to arc furnace, electric arc furnace technology, and consequently the availability of raw material has gone down. So China is no longer such a strong player what it used to be at one point of time in carbon black. So we see this as an opportunity as an organization. On one side, Russia is impacted. On the other side, China is not as strong as it was in the past. So to my mind, in spite of this Russia-Ukraine issue and pandemic issue, we should be looking at positive and decent growth going forward. And we are quite confident that we'll be able to grab this opportunity which comes on our way. We had also issues last quarter, and which is still kind of lingering as of today, that there are concerns on the supply chain movement in terms of availability of containers, in terms of availability of ships, etc. Cost of supply chain has gone up substantially, so that continues to bother us. As far as automobile industry is concerned, they are still running short on getting semiconductors, so that is still a concern area. So these are a few things which are bothering us, but I think we need to learn to live with these issues and move on and try and see more the positive side rather than getting too bothered about this some bit concern. Let me now talk about the expansion plan. Where do we stand on the expansion? What is the current situation on the greenfield in Chennai and the brownfield in Mundra? As far as the greenfield of Chennai is concerned, broadly we are on track. The target date what we have is December 2022. The outlay for the whole project is around 800 crores, and as of now, I think more than 200 crores is already invested in that project. most of the long lead time delivery items, long lead time items have been ordered. All the equipment from within India as well as imported, all have been ordered, and we expect them to be reaching our site on time. Necessary follow-ups are being done by different teams to ensure that. We have also obtained all the necessary permission from government authorities, be it from Delhi or from the local government, Tamil Nadu government. We have got all those permissions as of today. Construction activities are going on at full blast at the site, and we are hopeful that broadly we'll be on time. Of course, we lost some time because of, if you remember, because of heavy rain in the beginning of this year, which was very unusual in Tamil Nadu normally, which was very unusual, and it does not happen in Tamil Nadu normally, but it happened this time, and we lost a lot of time because of that. We're trying to catch up on that lost time as quickly as possible. But broadly, I feel ballpark will be on time to finish off the project by end of December 2022. The brownfield capacity expansion is also on in Mundra. At this point of time, we are putting up one line of capacity of roughly 20,000 on a gross basis, and this is phase one. This should be through by last quarter of this financial year, or maybe a little early next financial year. So that is the target we are looking at. And with this 20,000 additional, the total capacity on gross basis of specialty will go up from 72,000 to 1,12,000 tons. This is gross capacity I'm talking about. We also have a plan to add one more specialty line, for which we are working on the design and the product portfolio. And once that is finalized, then once the reactor design is finalized, then we start the implementation of that project also. We will keep you posted on that as well. I already mentioned about CPP, that we have commissioned one 7 megawatt power plant at Palej. This was subsequent to the CPP 8 megawatt what we have added in Mundra in Q1 of FY22. Right? Now, this is taking the total capacity to 91 megawatt at this point of time. Additionally, at this point of time, another 7 megawatt CPP is getting added. It is under implementation at this point of time in Kochi, and should be over somewhere either end of this quarter or maybe early next quarter. 7 megawatt. So this is on the power side. Talking about ESG. ESG has been a focus area for us as an organization for some time now. You must have also seen the last report what we posted on the website. You must have seen that. For our kind of organization, naturally, out of ESG, one critical focus is E, and we are very particular in terms of when we talk about environment, we talk about emissions, we talk about energy conservation, we talk about water conservation and waste management. Our primary focus is on reducing greenhouse gases. In the process, we will also reduce carbon footprint in the environment to create a better environment for the society as a whole. We are also focusing on the societal needs, and there we are particular in terms of health and safety of our people and the people who are residing near our facilities. We are having our commitment with our customers, with our vendors, and also the community who are there nearby. So from the social point of view, we are looking at all these initiatives. And finally, from governance point of view, we are looking at our board composition. I'm sure we must have seen that the number of independent directors and their portfolios and the overall the board efficiency. We're also looking at ethics and transparency as a culture in the organization. That's very important to us. So these are the initiatives we are taking in the area of governance. So as a whole, ESG is a focus area for the organization, and we have also partnered with one of the leading consultants to help us to train the policy and the implementation plan and the roadmap for ESG and sustainability for the organization. And the work is already on. There is a team which has already been formed in the organization on account of working on the ESG initiatives, and they are working very, very closely with internal members as well as with the consultant. So this is on the ESG side. And broadly, this is how I want to sum it up now. I've talked about the business scenario, and I will now maybe I'll request Mr. Chandak to say a few words on the company's performance and maybe on the ESG also, because we were spending a lot of time on the ESG thing, and then we can open the floor for question and answer.
Thanks, Kaushik. You have already covered extensively. On ESG, we are taking a lot of initiatives, including net zero and all that. And we have engaged one of the best consultants to advise us what more action can be taken on various fronts on E, S, and G. And as such, company has delivered good numbers in the last quarter, in spite of difficult times, as explained by Kaushik. And even specialty volumes also have gone up as compared to previous quarter. So as far as volumes are concerned, we are on track. As far as costs are concerned, some cost challenges were there. So those are impacted to some extent, and hopefully things will recover soon, and that will help us in the current quarter onward. So thank you, Kaushik.
Thank you, Mr. Chandak.
Yeah, we can invite.
So I think we can now open the floor. If you have any query or suggestion, any guideline for us, we'll be happy to have that, please. Thank you. Over to you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Dhaval Shah from Swan Investment. Please go ahead.
Hello.
Yes, please.
Yeah, hi, sir. Sir, yeah. So one question on our cost side. So our other cost, it's X of employee cost is around 138 crores for the quarter. Now, like 2 quarters back also we had this similar, in Q1 we had the same cost, then it went to 127, 108 in the third quarter. So what is leading to this variation, which is the component which is driving this cost figure by 20-30 crore up and down? Hello?
Hello, yeah. So
yes.
A couple of things here, last year's employee cost versus this year. One is last year, if you remember, it was a COVID year, and as an organization, we took a few hard decisions relating to employee cost. One was employees voluntarily took a salary cut, okay? So that led to reduction in employee cost. That was number one. Number two, some of the incentives, annual incentives as well as increments what we give to our employees, last year we did not consider any of them. So that also impacted the employee cost total, and it came down naturally. But this year, obviously, last year we have obviously reversed all those things. So when you compare, these two are going to play a major role. Additionally, also, since we are going ahead with expansion, we have started taking more executives and more professionals on board. So number of people are also going up overall. Plus, in the area of research and development, we have done a lot of hiring in Europe as well as in India. So combination of these 3 factors, one is salary cut, which was taken voluntarily by PCBL employees. Number 2, no increment or incentives were considered last year. And number 3, additional manpower in different areas in view of this greenfield plant which is coming up. well as R&D and other operational areas. So because of these three reasons, you can see this difference. What is
yeah. So this is that 42 crore figure. All the factors which you mentioned is related to the employee cost, correct?
Mm-hmm.
He was talking more about the full year number, Dhawan.
Okay. So the other point which I want to understand is the December quarter we had 108 crores of other costs, and in this quarter we have 139 crores of other costs. So what has led to this sharp increase?
Can I take this question? Typically in the last quarter, there are some year-end expenses, some provisions which are refined, and typically if you even look at last year's same quarter number, you will find it very close to the current quarter's number.
Yes.
Right? So like CSR, whatever remains the unspent at the year end, we need to provide for that, and that is accounted for on cash basis as per accounting regulation. Now in this quarter, what happened last year, if you look at our transcript, you will see that we deferred some of the maintenance costs because we did not see that third quarter performing well, and intentionally put some of the maintenance activities also to fourth quarter. And that time also we mentioned that these are costs which we are deferring. Eventually these will come back. So with that, I mean the number looks higher, but in absolute terms these are not very significantly high. 2020 our total other expenses were 450 crores. 2021 it came down because of all the cost rationalization measures that we took, right? But beyond a point is counterproductive. And this year our volumes have gone up significantly, 70% volumes have gone up, variable cost has gone up because of that, and also inflationary pressure because everything has become expensive with crude prices increasing. Right, our agent commission has gone up, our freight cost has gone up, packing material cost has gone up, even the spare part cost has gone up. So therefore, in absolute term, it might look a significant increase, but if you look at it in the light of what is happening generally in the commodity prices and with our volume, you will see it very fair.
Got it, sir. And sir, how does the immediate, what is the scenario panning out in terms of the, able to take the price increase with our customers, the freight cost, because we see gross margin getting impacted. In fact, it is at a lower level compared to, couple of quarters if you see in the history. So how do you see the scenario coming back to normal years?
Obviously, such a sharp increase in crude price is a difficult to pass it on to our customers quickly. But one good thing is that with a large chunk of our customers, we have a formula understanding. Well, now it automatically passed on to our customers with certain lag effect, of course. Certain lag. So that is how it's getting passed on to your customers. As far as other than this segment where it is formula linked, there the pricing power of PCBL is pretty strong. And luckily for us at this point of time, we see that the demand is quite decent and there are certain challenges on the supply side. So demand is in our favor. So therefore, it is easier for us to pass on the cost increase to our customers. But we need to be also fair, and precisely that is what our approach is. Do not want to take advantage of the situation, but we also want to make this additional cost coming to us, a reasonable portion is passed on to our customers. We are quite confident that we'll be able to pass on most of it, and by virtue of, in addition to that, by virtue of better efficiency in the operation, we should be able to do better going forward.
Okay. And sir, in your initial comment, you mentioned about Russia being a key player in the carbon black market. So how has the international market got disrupted because of the sanctions? Is there any opportunity for us because of that? Can you please elaborate a bit on that?
Yeah, precisely. As I mentioned, I think I talked about China as well as Russia.
Yes, China, yes.
China, obviously, China is going through another story, which is consolidation, pollution control measures by government, and lack of availability of raw material, and therefore the supply side of carbon black from China is getting a little bit constrained. On the Russia story is little different because of sanction, etc. They're finding it a little bit of competition at this point of time. And both, in a way, are advantageous for us, because there's a challenge on the supply side. Since the supply is getting constrained, demand so far is holding, and therefore it is an opportunity for us to push the envelope further. So, in a way, it is advantage for us.
Okay. Yeah, thank you. I'll come back in the queue, sir.
Thank you.
Thank you. The next question is from the line of Jain from ICICI Securities. Please go ahead.
Yeah, thanks for taking my question. Few from my side. First, touching upon again on the Russia. Can you help us understand how large is Russia in terms of capacity? And I believe they should be predominantly supplying to Europe. So that should open up further sales for us in Europe, considering that China themselves are constrained in terms of capacity. Are we seeing the benefit both on the volume as well as on pricing, or as of now it is largely the volume, despite being domestic volume muted, we are able to fully sell the volume. So the benefit looks like predominantly on the volume side. Is that a fair understanding?
Well, your first question about Russia, their size is almost similar like India in terms of capacity. It is 1.1 million tons. But the difference with India is that just about 300 out of that, 30% out of that is used domestically, the capacity, and rest 70% goes out of the country, primarily to Western countries, Western Europe. So since there are some restrictions now, not fully, but some restrictions are there, so that is to some extent advantage for us. And China I have already talked about. So both this combination will definitely give us advantage from volume side. It will give us some benefit. But having said that, we are already kind of fully utilized, capacity is fully utilized. So therefore, very limited scope for us to leverage this till the time the Tamil Nadu project is through. We don't have additional volume at this point of time. But also there might be some benefit in pricing there. But we need to see the situation, and as I said that as an organization, we are extremely ethical. We do not want to take unnecessary or undue advantage of any scenario. So even if there is too much of tightness, we will not go for unfair pricing for sure. We will remain fair on our pricing, and we are confident that by virtue of our internal efficiency, we will be able to improve our margin. I hope I have clarified your point.
Yeah, fair enough, sir. Fair enough. But this improves our visibility on the faster ramping up of Chennai facility. Earlier we were talking of 3 years. Do you think now we can do it much faster than the earlier planned 3 years?
No, I think Chennai from the start got delayed because of pandemic. We could not initiate the project activity, but we took a very tough target in terms of completion. Just about 15 months or something like that we have taken. And we are trying our best to finish it off in time, which is December 22. We are hopeful. Maybe a little bit here and there because I mentioned that we lost some of time in the beginning of the project due to very heavy rain. Unusual in Tamil Nadu, but there was a very heavy rain and we lost about 1.5 months there. We're trying to make up as far as possible. But definitely we'll try our best to, because we also see that opportunity clearly. That faster we are able to commission Chennai plant, it is good for the organization and good for all our investors.
No, I was more asking from the capacity utilization perspective. Earlier we were talking of once we commission the plant, we used to speak of 3 years to reach the peak utilization.
I understand the point now. Sorry, I missed it. I feel yes, possibly it will help us. It may not take 3 years in the current situation. It might be a little faster.
Little means are we talking of something like an 18 months, 1.5 years? Is it possible? As in, are you seeing that kind of a strong demand?
Maybe possible. Difficult to really give a clear time frame at this point of time because after commissioning there is certain approval process which anyway takes certain time. But in the given situation, I have a feeling it will be a little faster than the normal time schedule.
Got it. Next on the power revenue and EBIT side, I thought coal prices going up has shoot up the power demand in India. That should have a positive rub-off on our power revenue and EBIT, and clearly, at least this result doesn't show. Is there an upside to our power realization revenue? Are we able to generate more out? And now that we are commissioning 2 more plants, how should we see the power segment contributing? I think that could be a big delta to our margins.
You are right. I think definitely there will be some delta because we have seen in recent times because of this coal shortage and other things. There's some improvement in terms of the rate in the market. The spot rates as well as in the bilateral rate, there is some improvement, and economy also is coming back on track. So demand for power is also going up. So net definitely we see this opportunity going forward, and hopefully it will stay like that for some time to come. An organization should get benefit out of that.
Okay, so we have a contracted realization for power, right? When does it come for renewal?
Typically, we get into contracts which are maybe 6 months to 1 year or 1.5 year max. It varies within that. And typically 70-80% we could go for contract, and rest we normally supply to the grid directly.
Got it. Last on this new product and specialty side. Last time when we spoke of adding 10,000 metric ton additional capacity per annum for next few years.
Right.
And now that we are expanding another line, do you think you are gaining more confidence on the specialty, and could there be another upside to the 10,000, considering that we are getting into newer and we are launching new lines?
Yeah, you are absolutely right. We are extremely confident on the specialty side because today, as a company, as PCBL, we are approved by all big specialty black users, across the globe. Everyone. You talk about Clariant, you talk about Borealis, you talk about Borouge, you talk about Reliance. Every big name was there in the specialty field, covering plastic, paint, ink, coating, and all. We are approved there, and we have business relationship, commercial business relationship with them, and therefore we are extremely confident that we can grow pretty fast. We have taken a target to grow at the rate of 10,000 incremental every year, but we are continuously scanning. We are working very closely with our R&D team, and maybe we will be able to beat the target going forward.
Got it. Just last question from my side before I come in the queue back. Is there any scope for optimizing the existing capacity until Chennai come down in terms of product mix or the manufacturing process or same bottlenecking? Or this whatever we are doing today close to under 120,000 metric tons per quarter, do you think we have saturated entirely any option in terms of growing the volume until the new capacity addition happens?
I think, we have very limited opportunity there. We are continuously fine-tuning and trying to improve our operation, improving our productivity, trying to improve the reliability of plant further. So, which will add up to some delta, but obviously it will not be a very big number. It will not add up to a very big number. It will give some delta for sure. But the big ticket item will come, the big volume will come from Chennai and Mundra for specialty.
Great. Thanks, Kaushik, for answering all the questions, and best of luck for coming quarters.
Thank you so much. Thank you.
Thank you. The next question is from the line of Bhavesh Chauhan from IDBI Capital. Please go ahead.
Yeah, hi, sir. So just wanted to know what was your specialty volumes for this quarter?
Sorry, come again?
9,300 something.
9,350 in last quarter.
9,350 last quarter.
Okay. And total, I think for the year you said 35,000.
Close to 35,000. Just short. 34,686. 34,686, precise number.
Okay. So, sir, we are saying that we are getting good traction in specialty. So, should we see a significant ramp up in specialty volumes in FY23?
I think you will be seeing further improvement on this. Maybe around 25% growth you will see roughly on this. Yeah. Roughly say in terms of absolute number, maybe 10,000 plus kind of growth we should be seeing. this year.
Oh, so you're saying 40, you'll be doing something like 45,000?
Yeah. 35 can become 45,000.
That's what we're targeting, from 35 to move towards somewhere close to 45,000 tons.
Okay. And with regards to our, have you started negotiating the prices with tire companies for this year, fiscal year?
Okay, negotiation with tire companies, that's your question. We have a formula-based understanding, so we do not need to negotiate every year. So we typically have that understanding that how the cost will be passed on, etc. And once in maybe 2 years' time, we just talk about the inflation part, which is not part of the formula or linked to formula, but not directly covered there. The cost portion of raw material is automatically passed into tire companies, which is the major portion. So it doesn't call for negotiation every now and then, really.
Okay. And so, sir, should we see our EBITDA per ton again going back to our that 15,000 mark where we are from this quarter onwards, as we are more likely to raise prices?
I'll request Mr. Raj to respond to this.
However, we would not comment on quarterly performance numbers and all, but yes, the direction that we see in our performance, possibly we should be performing better than that. So directionally, over a period of 3-4 years' time, you will see better margins improving from the current level. Even for the current full year, EBITDA per ton is about more than 14,500 rupees. And as we close another year, possibly we will see improvement because of our internal efficiency, product portfolio changes, and of course there is some operating leverage also.
Okay, sir. That's it from me. Thanks for answering the question.
Thank you. The next question is from the line of Chintan Chheda from Quest Investment Advisors. Please go ahead.
Yeah, hi. Thanks for the opportunity and good afternoon to the management. Sir, my first question is related to the gross margins. So even in FY22 in such difficult times, our blended gross margins for the year has been around 29,000. So when we talk about efficiency improvement and better product mix, so where do you see this gross margins per ton going towards in FY23?
If you look at last of 5 years in our history, every 4-5 years you would witness our gross margin improving by 5,000-6,000 rupees, right? So we take initiative that fructifies and then that gives us a lead in our performance, right? So directionally, the kind of jump that we have witnessed in last 2-3 blocks of 5 years, I think next 5 years we should be able to deliver a similar kind of growth. Yes.
Okay. So this over the say next 2 to 3 years, we would see at least 50% of that.
There can be periodical fluctuations because there are so many variables in the economy also, right? Like last 2-3 years have been extremely volatile. There were pandemics, and there was geopolitical conflict, inflation has shot through the roof, energy prices are going up, right? So This is a volatile period, so periodically it can fluctuate, but directionally, like I said, if you look at blocks of 5 years period, you will see the direction.
Okay, fine. And sir, secondly, can you just share the contribution margins for the...
Sorry to interrupt you, Mr. Chheda. The audio is breaking from your line. Please check.
Yeah, is this...
Sir, the
Hello?
audio is still breaking from your line.
Hello, is this better?
Yes, sir. Please proceed.
Yeah. Sir, can you just share the contribution margins of rubber carbon black?
We don't report segment margins, Chintan.
Okay. Just a second,
No, we don't report it. So anything which we don't in the stock exchange, we will not cover on this call.
Yeah. And sir, last...
Sorry to interrupt you, Mr. Chheda. The audio is now breaking from your line.
Yeah, I'll join.
Sure. So Chida, you can rejoin the question queue.
Yeah.
We'll take the next question from the line of Peter from Kisima Wealth Management. Please go ahead.
Hello, good evening, sir. Am I audible?
Yeah.
So my first question is that, to touch upon what you mentioned, so when oil in FY21 was about $45, as a percentage of raw material cost was about 60%, and EBITDA margin was close to 20%, and PAT was about 10%. While in FY22, when oil has averaged about $80 a barrel, raw material percentage is increased by 70%, and EBITDA margin has been 15 and close to 10%. So my question is, every community believes that oil will trade above 100 and maybe 110. So what can we expect to be the impact on margins if for every $10 above 100 the oil goes for PCBL?
Well, Peter, the change in crude prices, though it impacts our working capital, gross realization, etc., it doesn't impact our absolute margins per ton. So despite crude moving up from $46 to $80 average this year, you will see that our gross margins and EBITDA margins both in absolute terms has gone up. So per ton EBITDA and gross margin both has gone up this year, right? In terms of percentage, it might look thinner because the base is increasing, right? The top line goes up steeply with such steep increase in crude prices. So I would not say that's a very relevant metric to look at for our performance evaluation. Now, speaking about what will happen to our margins if crude moves further up by $10, honestly, more than crude, it is also a question of demand supply. So if demand remains robust, right, and if you don't see immediate large supplies coming in the market, we will still have ability to price in all the changes in raw material costs. And as of now, like our MD was explaining, the overall demand supply dynamics looks favorable for the manufacturer.
Also, which means you can increase realization in the near future as well, right? Further.
Yeah, so it will be more of a factor of demand supply situation rather than only food prices in isolation.
Okay. And the last quarter it was mentioned that raw material basket cost was about 77,000. This time what is happening?
It has gone up by about roughly 10,000, 9,000 rupees or it went up during the quarter.
And sir, out of curiosity, is that there was this huge debate about the anti-dumping duty on carbon black, which was not extended. So can we see any material impact on domestic players like you on that, or that will not be applicable?
Anti-dumping duty is not there since last 1 year, 4 months. December 2020.
December 2020?
Yeah.
So usual conventional theory is that if there is no anti-dumping duty, it may put pricing pressure on domestic companies like yours. But is that something you fear on the ground?
No, so because it is not there, so there is no incremental concern for us. I mean, even after this was lifted, this anti-dumping duty, our performance has only improved. And not only in domestic market, but even in international market, we are selling more volume, where there is no tariff barrier per se between different countries.
And sir, in terms of final questions, in terms of exports, so which are the major regions which contribute about 50% or more of your export market, and how are they doing? Are there any import bans they are undertaking to protect their domestic industry and so on and so forth?
So we have a very well spread geographical portfolio for our overseas sales. Just one moment, our MD will answer.
Out of our export or international market, the material which goes, major portion goes to different countries in Asia, and then followed by Europe, and then finally some portion goes to USA. Obviously, USA is a bit of a challenge nowadays because of the freight cost, which has gone up substantially. But other than that, we are pretty well spread, and we have the ability to move from one country to another if required, if situation so demands. So far, we have not faced any major problem anywhere, but we are always very watchful. We are keeping a close eye on the situation, how it pans out, and depending on that, we can take any decision. We are extremely agile on this, and we can take decision accordingly. Just going back to your previous point, that about anti-dumping and the impact and all. Obviously, anti-dumping is not there for more than a year, and we are still able to hold forth without any problem, and the performance is actually improving. So, as an organization, our philosophy is very clear. We should be competent and efficient enough to ward off any competition which is coming on the fair platform. If the competition on a fair platform, I think we are the best. Nobody can really beat us. If it is unreasonable competition, unfair competition from someone by virtue of dumping, like what happened from China, I'm sure the government of India will support us. But otherwise, we don't require any support because we are efficient enough. We are of global standard. We are setting the global benchmark today for others to follow in every respect. We are not really too concerned about anti-dumping is there or not there. And you can imagine 30% of our current production goes out of India. And it is a matter of time. I think it will increase to 40-50%, and there is no anti-dumping anywhere. So we fight it out on our merit, based on merit. So that's how we look at business philosophy. It's about philosophy. Yes, anti-dumping is there. It will be a bonus, but we don't care about it here.
Okay. And finally, sir, is in terms of automobiles in domestic, for example, CV has done really well, PV has picked up, but certain like two-wheelers have yet to pick up according to data released by agencies. So, as a lead indicator, do you feel domestic tire demand is bouncing back to its 2008 FY18-19 levels, or still there is some subdued demand?
It is definitely improving with respect to last year, but I have looked at the numbers. It has still not gone back to pre-pandemic situation. It is still a little far off, but it is definitely climbing back steadily. Only concern is right now the inflation and all. Hopefully, it will not derail the whole thing.
Okay, that's all from my side. Thank you for your time, sir. All the best for the future.
Most welcome. Most welcome.
Thank you. The next question is from the line of Tarang from Old Bridge Capital. Please go ahead.
Hello, sir. Good evening. Couple of questions from my side. One, sir, if I look at your carbon black, both specialty and non-specialty capacities, when you're estimating your GHG emissions, just wanted to get a sense on how would they be on a per ton basis? Would they, since the manufacturing process for specialty is quite different from non-specialty, but essentially it is carbon black. So just wanted to get a sense in terms of what are your emissions there on a per ton basis, and how are you tracking it, and how do you resolve to reduce them as you move forward? That's number one. Number two, insofar as your 35,000 tons specialty sales are concerned, what proportion would be exports? And going forward, as you increase your volumes here, would it largely be feeding into domestic, or would it be feeding into exports?
Okay, I'll go one by one. You talked about on the emission part first, GHG you talked about. I don't have the figures readily available with the breakup between specialty and regular black, but on overall basis, typically it is around 2 tons of CO2 per ton of carbon black. That is the emission level. And then this is across the industry I'm talking about, carbon black industry I'm talking about, 2 tons plus per ton of carbon black production. Now, that can only come down when you are able to improve your efficiency of production. And I think the numbers what we are like to achieve now, this year with a lot of initiatives is somewhere around 1.75 to 1.8 tons CO2 per ton of carbon black. That is what we are targeting, and we are hopeful that we'll be able to achieve that in this year. And that's a substantial improvement and will be far better than industry generally. But I don't have the breakup between specialty and non-specialty. I have my team members who are expert in this. They will be able to share with you subsequently if you want. Definitely we can share with you. What was your second question you said?
Sir, can I just follow up on this one?
Okay, geographical. Sorry, come again.
Can I just follow up on this one?
Yeah.
So your peers globally, Cabot and so on and so forth, would they be at similar levels as you are, or would they be higher or lower on a consolidated basis?
I don't want to comment at what level they are, but as I understand the industry report says it is varying between 2 and 2.15 tons of CO2 per ton of carbon black. That is the range broadly. That's what I understand.
Got it. My second question, sir, was to understand what proportion of your current specialty business volumes are exports, and as you grow forward, would it largely be export-fed or domestic-fed growth?
Okay, currently we are roughly about 50% in domestic and 50%, I'm wrong. It is about 70% international and about 30% domestic roughly. That is what the current level is. Going forward, I think international will continue to be more because the market is much larger outside of India, as you know. But having said that, India is also growing. We can clearly see some of the players are growing in India as well. But I think the percentage terms, international will definitely be more than India even in future, because the larger market is outside India, not in India.
So the other, as I understand, the domestic market is at about 60-65 KT. So the balance, given that you're the only manufacturer out of India, the balance is getting imported. Would that be accurate?
You are right, absolutely right. Most of it is taken care of by us. Major portion of the market is being taken care of us. Some items are imported, some portion is imported from outside.
Okay. Thank you. Thank you, sir.
That's it, ma'am.
Thank you. The next question is from the line of Abhijit Bora from Sharekhan. Please go ahead.
Yeah. Good afternoon, sir. I have only one question on the margin. So, if I see that you passed upon the entire raw material cost increase, if I calculate the realization in this quarter, so is it safe to assume that these kind of margins you have seen in Q4?
Can you repeat your?
Bharatji, we are not able to hear you properly. Can you repeat it, please? Bharatji,
Yeah. Now it is clear?
Just say a few things, say a few words.
Yeah, now it is clear. The voice is clear.
It is better, slightly better. Just go.
Yeah. Yeah. So my question is that if I see the realization per ton basis, we have taken a blended increase of more than 9,000 rupees per ton, which is almost matching with what the increase is in the raw material cost. But still, we have seen the our EBITDA margin declining this quarter on a sequential basis. So, I just want to understand, what has really gone into lower margins, because the price hike is matching with your raw material increase.
Abhijit, I explained at the beginning of the conversation. Our expenses have gone up during the quarter. Some were deferred from the previous quarter, and some expenses are typically the ones which are booked in the last quarter, like CSR and all. And because of higher expenditure, so last year also same quarter you will see the expenditure structure was similar to this quarter. So because of that, despite our raw material cost getting passed through in our realization, EBITDA per ton has come down.
Okay, so there is no one-off in these expenses, right? And
there are typically some year-end expenditure, provisioning, actuarial valuation related and fair valuation related one-off type expenses which comes in the fourth quarter. So typically that has also come in this quarter.
Okay, and if I look at Q4 FY21 margin, it was quite on a elevated level. So because these costs were also there in the Q4 FY21. So just not from the QOQ perspective, even from YOY perspective, the margins are down.
No, don't look at margin in absolute terms. Because last year, same quarter, the market was in a completely sold out condition, and the freight cost was also not high. So we were making very high margins both in international spot business and domestic spot business. Unfortunately, the last quarter was not a similar quarter. There were challenges all over. Crude is at $100 plus. there is a geopolitical issue in the eastern part of Europe, right? And domestic tire and auto industry is not faring well. So it's not comparable. So there will be some seasonality in the business. There will be some extremely good quarters and some reported quarters. But if you look at performance on year-on-year basis, you will see that direction. So on a full year basis, the performance this year is significantly better than last year.
Okay. One final understanding I want on the margin front is that if our volume further improves to the levels of 117, we will have a slight operating leverage. Plus, if the freight rate comes down, we will be back to more than 14,000 per ton of margin. Is that the right understanding?
Yes, when freight rates rationalize, they come down, then obviously there should be some improvement in the margin. But then again, I mean, this demand-supply equation should also hold good.
Okay. 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 Thank you, sir.
Thank you. Thanks, Abhijit.
Thank you. The next question is from the line of Bharat Sheth from Quest Investment Advisors. Please go ahead.
Hi, good afternoon, Mr. Roy and Raj. And
Good afternoon. Good afternoon.
sir, one question, so which you might have in this Q4, our specialty volume is little down than the Q3 level. So, is there any impact on the demand over there also, or which we have seen, say, in other sector also, like tire as well as rubber chemical?
The combination of two things, Bharatji. One is, of course, the market was slightly down because of this confusion, uncertainty, high inflation, etc. That contributed to the problem. And also, don't forget that we had February in this quarter with 2 days less for business. So combination of both. But I think it's a temporary thing. We should be able to recover going forward.
Even on specialty also?
Even on specialty, absolutely. So no cause of concern at all. And I think I just mentioned a while back that year on year we are definitely looking at about 25-30% increase in terms of specialty sales. From 35 to 45 we are targeting. So it was just a small blip, you can say.
And if we can roughly break down our 454,000 volume between, say, tires, rubber specialty and rubber chemical, rubber specialty?
Roughly about 64-65% goes into tires out of this total. About 28-29% goes into performance chemicals, and about 8-9% goes into specialty. This is I'm talking about volume percentage.
Okay. And where we are seeing impact on the demand side, as you said, whether it's a performance side, where I mean our customer are unorganized or a very small player, or a tire side?
As on today, it's still all right, but the issue is, suppose tomorrow the inflation goes up further or further disruption happens across the globe. Already it is there in eastern part of Europe. Now, if such things continue for longer period of time, that will start impacting final demand. Customers will not be there to buy cars. Economy will start shrinking, so movement of vehicles will be limited. Commercial vehicles I'm talking about. So that will all combine into lesser demand for tires and automobiles and specialty also. So, but that is an extreme situation I'm talking about. If things go really horrible, if World War III starts tomorrow, for example, things will go haywire completely, you know that. But if we assume that those kind of things will not be there on the horizon, then I think we should be able to pull through and we'll actually do better than what we did last year.
Okay. Sir, one more question on power and then the new product line. So power generation, we have added around, say, 15-16 megawatt during. So how much additional volume we are expecting? We have generated 534 million unit and 311 is a power we exported. So how we have seen? How do we expect this to be in FY23?
Talk about.
We just added Bharatji 15 megawatt capacity in the last financial year, and we are also going to add another 7 megawatt in the coming quarter. Right. So with that, we will have some 22 megawatt of surplus capacity, Now, it takes some time to stabilize all these new CPPs. But despite that, we believe that, and 1 megawatt is equal to some 8 million units additional.
Correct.
So actually, I mean, from that perspective, it should give us about 150 to 160 million units on a full year basis. My sense is that we would get about 30-40% in the coming year.
Okay. And Raj, so whether this will be sold on through this exchange mode or it will be again a contracted, so where in exchange the realization is higher?
Well, normally we keep 80-20 balance between mid-term and contract. But currently spot is looking attractive. So we are keeping a little more cushion there. But it will also depend on what kind of realization we are getting from under bilateral contract and what is the spot pricing. So we will remain dynamic here.
Okay. So and you said that around out of this surplus power for export will be approximately how many million units? I missed that.
This year we did about 311 million units of cell. My sense is that all things remaining similar, I mean, steady state, we should be able to do 30-40 million units more next year.
So it takes such a long time to stabilize this whole power business?
No, part of the capacity, power capacity will also cater to the new capacity, brownfield expansion, etc., which is happening.
Okay.
Right, because ultimately the gas that we generate is a function of how much carbon black we produce.
Okay. And Mr. Roy, can we talk about little more on the new product that we have added and new customer added in the specialty side during FY22, and how do we see some of the other products that which were in the pipeline for like EV battery related and all? So where are we seeing?
Okay. So in case of specialty, there are different segments. We have plastic, then we have paint and ink, we have coating, and then we have got conductive. Okay, these are different segments within specialty, and every segment has got different contribution level, different profit margin generally. So we are continuously going up the value chain within this 4 or 5 categories what I just mentioned, and the research work is going on in India as well as in Belgium.
Correct.
And between these two R&Ds, as I mentioned, we have more than 50 scientists and technologists who are working. So, and there are 4 verticals within this R&D, and one vertical is new product development. So, one group of scientists and technologists, they are working continuously on new product development.
Correct.
Typically, we are trying to add roughly about say 8 to 10 new grades every year with our current ability and understanding of the market and requirement of the customer. We are targeting about 8 to 10 grades. I think that roughly about 10 grades we are working on in recent times, 10 new products, and I think 2 have been launched already, and 8 we are in the process of fine tuning. We should be launching it during the course of this year sometime. That is the broad thing.
Okay, and then on the conductivity side that we were working on, so what stage are we?
So it is, I will not say it is very advanced stage. It is somewhere, I'll say a little bit initial stage only.
Okay.
Because we are looking at conductive. Conductive is the highest end of specialty, right?
Correct.
Superconductive is the highest end of specialty, and typically it is used in vehicles like the Tesla high-end EVs basically. So I will say that we have started working on this, but to my mind, it will take some more time before we say yes, we are ready.
And since you said that this new product which you have launched, I mean, I believe that this will be having a higher margin, correct?
Obviously. I mean, continuously we are going up the value chain, We started at the bottom of the pyramid and slowly we are going up the value chain.
Okay. Thank you and all the best to you and your team.
Thank you so much, Vedantji. Thank you.
Thank you. The next question is from the line of Shashank Kanodia from ICICI Securities. Please go ahead.
Yeah, good evening, sir. Sir, in the initial remarks, you mentioned that we will be doing something like 10,000 additional tonnage of volumes in special carbon grade material. So, on the overall carbon black sales volume, given the industry tailwinds and the greenfield expansion on track, so can we clock some 50,000 tons of incremental volumes each year for next 3 years for Philips Carbon Black?
We could not really get your question properly. We could only make out you're asking something on specialty black, right?
No. So, sir, on an overall volume front, last year we did 4.5 lakh tons of total carbon black sales. So going forward for next 3 years, can we incrementally add 50,000 tons of carbon black sales volume each year?
Prashant, are you asking whether we can add 50,000 tons of additional volume this year?
Yes, sir.
Overall or specialty?
Overall.
Okay. I mean, okay, this year, of course, possibly 50,000 will not be possible because the new capacity is not coming in. So, but next year, obviously, we'll be looking at. Next year, definitely, we're looking at adding 50,000 tons because Chennai will be up. Mundra also will be up and running by that time, specialty. So next year for sure, but this year we'll see some delta improvement, which is coming out of efficiency improvement, productivity improvement, yield improvement. So combination of these initiatives, more reliability, better reliability of the plant. So combination of all this, you will some delta you will see increase, but not 50,000 tons.
Okay. And sir, what will be the capex spend for this year and next year?
And let me tell you, while I'm saying it is a delta increase, but still I think good 30,000-40,000 we are targeting by this internal efficiency improvement. Keeping fingers crossed, hopefully we will be successful in that. But next year for sure, Chennai will be through and next year for sure.
Sure. So what will be
the next question?
What will be the capex spend for FY23 and 24?
Capex for 23 and 24. I'll request Raj to respond to this.
With the current projects that we have in pipeline, Prashant, between 23 and 24, we will be spending around 1,000 odd crores on the greenfield and brownfield projects. Additionally, we will also have some R&D capex and maintenance capex. So roughly 1,000 odd crores between these 2 years. And this is without considering any further expansion because market opportunity perspective looks good, right, from opportunity perspective. So we may decide to even expand beyond our current plan. So I'm not considering that. It is only the ongoing project.
Right. And sir, then what is the gross debt on our books as on fiscal year 22 end?
Gross debt is roughly 680 crores, but we also had 400 crore plus of cash on our books. So net debt is less than 300 crores. And as I said, our long-term debt equity is just about 0.12. So it's hardly there. I mean, we don't have any leverage as such.
Right, sir. And one last thing, so on the tax rate front, will continue to be in this 20% bracket going forward as well?
Well, we believe, I mean, see, there are few things. I mean, it also depends on the level of profitability. We have some tax shield available. So if say our profit significantly moves up from here, then our weighted average tax rate would also go up. But my sense is that it would not go up significantly up from 20%. So it should be somewhere between 20-21% only, at least for the next year. So till next year, sorry, not next year, this year, 2022-23, we would have that tax shield available.
Great. Thank you so much, and wish you all the best.
Thank you, Sean.
Thank you. Ladies and gentlemen, that was the last question. On behalf of ICICI Securities Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.